from the moment you joined the program to now, where I'm sure you guys went through rigorous process in terms of evaluating companies and dissecting financials, and then obviously you found more of a passion towards the short side. Help us sort of have this framework around how you think about, or what have you learned about looking at investments from either the long end or the short end. So that's sort of a question, part one. Part two is think about, or sort of help us, guide us through how what you've observed, which we talk a lot privately, right? We talk a lot. We catch up all the time. And by the way, this episode sort of came from our idea of that beautiful night in West Harlem, actually, yes. where Columbia is and where you stay. After I went to the Robin Hood Foundation conference, shout out to them. They been donating to solve the property problem in New York City for the last 4 years. And after that conference, we had a great conversation at your place for way more than a podcast length, 6-7 hours, about life, about investments, about all that, right?
Yeah.
And sort of part two is you mentioned that what do you think separates sort of this natural difference between certain people are more suitable for not just the financial services industry, but actually more the investment professionals, especially on the buy side, right? So what makes a great investor? What kind of temperaments, personalities that generally tailor or thinking models tailor someone to more of a natural investor, therefore, thrive at a value investment program, and then will go on to do greater things in that field? Or what might some people, nevertheless, they can be great business people or getting a lot of value out of the MBAs, but what kind of things they were sort of, let's say, lacking in terms of being a great investor? If you can share the light on both, on what you've learned from an investment perspective and also about the people side of things, what makes a great investor?
That's a packed question.
That's right. Yeah. We throw heavy punches first.
Yes.
You gotta come out of the gate.
Let's get that out of the way.
Yep.
So I've only been there for since January, so 11 months for now, and learned a load about investing. And I came into business school wanting to touch upon the investing pillar, and especially at Columbia, where value investing started. And I truly think of it as a wonderful experience. I came into Columbia as a blank canvas, and there are great professors out there, adjunct professors who are industry practitioners that introduce you to how they invest. And I think being able to see all those data points slowly you start to get a sense of what kind of data pattern recognition that you would like or you have that you have conviction to invest on your own. And for me, just based on 11 months of data points, I like to see things that are out of whack, where they're supposed to be. Think of return profile as stacked Legos, and you start with the treasury bonds, and that's your risk-free rate, right?
Yep.
And up from there, you will have different spreads, investment grade, high yield, and then you touch upon equity. That's how I think about it. You will have a map of return of assets, and then you find dislocations, whether that's dislocations from the above or below. And from the below, you will do the long, and from the above, you do a short. And I think having that North Star, your mental map, really helps you to navigate through a world that dislocations happen more and more often, and the market that's right now a little bit irrational at times. So that's for me how I approach investing, is to find the dislocations in things are where not they're supposed to be. And in terms of what makes a good investor, I don't know yet. I still look forward to finding out more about it. And I see you as a good lipo for that, honestly.
I appreciate it.
Yeah. I think you have to be industrious. You have to be passionate about the subject. And more importantly, I think you do need a innate intellectual curiosity and honesty in order to do this job. There are, of course, investing is the industry where I see the most variety of personalities and backgrounds. It almost encapsulates all type of people. It doesn't matter what your background was, but what's important is that you're curious, you want to learn, and you're able to synthesize this information into your own opinion in a contrarian view. And if you don't have that, you may still do well, but I just don't think you will be able to evolve with time as the market changes. So I think that's my 2 cents on what makes a good investor. And that, I mean, you will probably have more to share on that end as well. You yourself is a good investor, you got a great track record, and you've had a bunch of mentors who have been great investors.
That's
and I think those lessons that you have given me and the spark of insights that we had over the past 5 years got me thinking about how I should express my investment view. Obviously, we are different people, different individuals. We have different. We're similar on personalities, but our tendencies are different.
Many ways to skin a cat.
Exactly. And in order to have the pattern that fit ourselves, and that's how this market is so interesting. Everybody has a different view, even given the same information. And being able to synthesize that is probably